biggest threat to the U.S. economy ever. The U.S. Treasury and the Federal Reserve recognize that taxpayers will have to pay whatever it takes to keep these two players in the mortgage game. Because the troubled mortgage giants, Fannie-Mae and Freddie-Mac, are so big that they could endanger the country's position with overseas creditors, and the next few weeks or months are extremely, very critical. With $5.2 trillion in financial paper in the markets tied to these two companies, a failure at one or the other could possibly would panic the U.S. and every other financial market in the world. It would be a disaster. And you wouldn't have to wonder about whether the U.S. economy would be in a recession, because we'd be looking at depression, a serious depression, straight in the eye at that point. Because Fannie Mae and Freddie Mac are just too plain big. It's incredible that two companies could be so large that their troubles could threaten the entire U.S. and global economies. Because it's the credit worthiness of the country at stake. And it's their very size that has turned the current financial crisis into something affecting much more than the mortgage market or even the U.S. banking sector. What's at stake now is the credit of the United States itself. And because of Fannie Mae and Freddie Mac, the overseas investors who hold $9 trillion in U.S. government debt and trillions more in U.S. dollars are just weeks or months away from losing faith in the government's credit worthiness. So in the days since the crisis at Fannie and Freddie turned red hot, the council that advises Saudi Arabia's king has recommended revaluing the Saudi currency, the rial, which is pegged to the US dollar, by up to 30%. That could be a first step towards switching the rial from a price pegged to the dollar to one pegged to a basket of world currencies. And a similar advisory body in another Arab country has suggested abandoning that country's dollar peg for its currency. And a third oil-rich Middle Eastern country, Kuwait, ended its currency link to the dollar last year. And much more ominously, because the threat is more immediate, some of the world's largest sovereign wealth funds, including that of China, are starting to edge away from the US dollar at an increasing speed. China's State Administration of Foreign Exchange, which holds the majority of China's $1.6 trillion in foreign currency reserves, of course mostly in dollars, has been holding talks with European private equity companies about investing in euros. So why do Fannie and Freddie matter overseas? And why is the crisis at Fannie Mae and Freddie Mac so important to overseas investors? 3 reasons. The two companies own or guarantee $5.2 trillion in home mortgages. That's a little less than half of the $12 trillion U.S. mortgage market. In comparison, the total U.S. government public debt totals just $9.5 trillion. In addition, Fannie Mae and Freddie Mac have $831 billion and $644 billion, respectively, in bonds outstanding. And the crisis at Fannie Mae and Freddie Mac wouldn't be so threatening or huge to U.S. financial credibility if these mortgage giants hadn't lied or fudged the truth to sell their bonds. Despite a very clear statement to the contrary in the legislation legislation that set up Fannie-Mae and Freddie-Mac, most investors believe the U.S. government stands behind the two companies. This belief, and some sort of implicit guarantee, is a major reason that Fannie Mae and Freddie Mac have long been able to borrow money in the financial markets at a much lower rate of interest than other mortgage lenders. That edge, or the edge, created by the belief in an implicit guarantee has been a key to the two companies' ability to grab an ever bigger share of the mortgage market. And the management teams at Fannie Mae and Freddie Mac have behaved or acted as if they believed in that implicit guarantee also. They have used their access to cheap money to build up huge mortgage positions without raising much actual capital from investors. It's a recipe for disaster. A huge disaster. So, the $5.2 trillion in owned or guaranteed mortgages at the two companies is backed by less than $100 billion in actual capital. That's leverage of over 50 to 1. For now, the U.S. government is caught in a very terrible bind. On the one hand, if the government doesn't stand behind Fannie Mae and Freddie Mac, many overseas investors could possibly see it as equivalent to the U.S. government defaulting on its debt. If the U.S. government walks away from Fannie and Freddie, these overseas investors will worry that the U.S. government could possibly walk away from the other U.S. debt they own and even from the dollar itself. There's already a sneaky suspicion among overseas investors that the U.S. government will try to solve its dual problems of a massive government debt and a huge, massive trade deficit by just letting the dollar tank. On the other hand, if the U.S. government does back Fannie Mae and Freddie Mac, it runs the danger that overseas investors will simply add Fannie and Freddie's $5.2 trillion in mortgages and guarantees to the $9.5 trillion the U.S. government already owes. By that calculation, a bailout would increase the debt level of the U.S. by at least 53% in a blink of an eye. Now, you could possibly object that overseas investors are simply wrong in their beliefs, that Fannie and Freddie never had any government guarantee, explicit or implicit, that no bailout would turn that $5.2 trillion in owned or guaranteed mortgages at Fannie and Freddie into U.S. government debt. But what's important is what the creditors believe. So, you might be absolutely right on the facts, but dead wrong in practice. You see, when you're a debtor, just like a landlord, when the landlord comes knocking, you're going to have to pay your rent. No excuses. So when you're a debtor, it's what your creditors believe, not any fact or facts, that is important. If your creditor, just like a landlord, believes you might not be able to pay, it's that belief that counts, no matter the fact or facts. So when the creditor cuts off your credit, what a creditor believes is especially important when a debtor needs that creditor to keep extending credit, more credit in the future to finance any new bills. And now, that's of course exactly where the U.S. finds itself, facing perhaps a huge disaster. So, what happens over the next few weeks or months is extremely, very critical. This is very important. This is like the linchpin, the link, and the chain. This is the key, like the chief cornerstone that the builders rejected. This could bring the whole economy, U.S. economy, down. A terrible recession, possibly even a depression. Anyway, these are more signs of the end times transition days, and there are many.